Hello and welcome to Newsclick. Today we have with us Rajat Nag, former Managing Director General of ADB, and we'll discuss with him as a banker, how does he look at the Greek crisis and what's happening now. Rajat, the Eurozone crisis, of course the Greek crisis as it were, has been in the news for quite some time. The basic issue is how do, as a banker, do you look at what the banking institutions are doing to Greece? Because it does appear that it's really the bankers who are setting what Greece should or shouldn't do. And the politicians in the European Union seems to be backing what the bankers are doing. So how do you look at this issue?
I think that's not an unfair statement at all, Prabir, but perhaps we can just step back a bit. And I think the genesis of this Greek crisis is really Greece joining EU to begin with. If you look back at 2001, there really wasn't any particular need for Greece to join. But for the sake of European unity in the euphoria of the moment, Greece joined. But it wasn't ready. Quite frankly, they fudged the books, aided and abetted by some Wall Street investment bankers.
Goldman Sachs was known to have
done that. So the bottom,
and Mario Draghi, who's today the chief of ECB, was one of the key figures in that.
Right. Now, so what happened was you joined a club, aided and abetted by others, and then you basically found that you really didn't have the wherewithal to pay for the membership, as it were. So for the next 7 years, 2001 to 2008, Greece basically borrowed its way to prosperity. And borrowed from whom? Private bankers, German, of course, some Americans, other Europeans, and private Greek banks. So basically the party went on by borrowing money, and then came the financial crisis of 2008. That's when the chicken came home to roost. And by 2010, basically Greece had a debt of roughly about 130% of GDP, which is high, but not totally outlandish. What their problem was that their fiscal deficit was about 15% of GDP. That is the one which sort of, and the debt was growing at about 12% per year. So suddenly Greece found itself not being able to service its debt. Now at that point, and of course hindsight is 2020, at that point I think the government, Greek government should have said, okay, it's a problem, it's a private debt, you sort it out, you take the haircut. Greece will have to bear some of the brunt. But the Troika, the ECB and the IMF, basically then came on the first bailout. And I think that was the beginning of the Greek crisis.
Two questions here, of course, and we'll deal with them one by one. One is the bailout, as you said, where the private debts were really nationalized, as it were. So the government, sovereign governments took over their banks' debts. This is one part of it, which you have identified. The other problem, of course, is the sustainability of the debt. But before we come to that, if we look at the 2008 crisis, which is what triggers all this, Spain did not have the problems that Greece did, but Spain is not in a very different situation. So it does seem that the debt or the Greek parting is only one part of the problem. There is a bigger problem of the Eurozone of different kinds of economies, and the fact that the Germans, who are supposed to be the good guys, actually have a huge surplus in their external trade account. So this is also part of the Eurozone larger problem.
Right, and I'll come to that in a moment. You're absolutely right. 19 countries. It's not United States of Europe. It's European Union. But 19 countries have to get together, sort of, synchronize their fiscal policies, which is never done.
It's an economic union, it's
right.
not a political.
It's not a political union. So the Greeks, I think, got into trouble by joining a party they need not have, and they couldn't afford. And they kept borrowing, and then after the first bailout, then the second bailout. And as you rightly said, most of the money was really to pay off the previous debt.
In fact, the argument is 90% of the funds which have been given to them post 2010 have been to pay back basically the banks. So essentially what's happening is money is coming from a source and it's going back to the same source.
But if it were just neutral, which it wasn't, it would have been still okay, I suppose. But the worst was that in return for that money, Greeks had to undertake some fairly severe austerity measures. Now, there certainly was and is profligacy. There certainly is reason to be able to increase your tax revenues, etc. But a fundamental mistake was thinking that if you just tighten your belt enough and cut down the expenditures, you'll be able to sort of save yourself to prosperity. Previously, you're consuming yourself to prosperity. Now it is a question of sort of somehow being austere and safe. The trouble was that the Greek economy tanked 25% over the last 4 years, 2010 to 2014. In 2014, for the first time, they saw a certain very slight 0.8% growth, but previous years consistently very significant contraction. So what happens? If you have contraction, you don't have people's income. If you don't have income, then what do you tax? So the multiplier effect of expenditure reduction and the tax buoyancy both worked in the wrong way. If you wanted the Greeks to be able to pay back all this debt, what you should do really in a Keynesian sense, you want the economy to grow and then you collect more taxes. But here it was the other way around. So it basically went into a tailspin. And I was mentioning to you earlier that the Greek tax collection isn't bad. At 22% of GDP, which is considerably higher than Germany, which is about 11, other countries around that, low teens. So it's not that the Greeks aren't collecting, it's that they're collecting of a much smaller pot.
The GDP has shrunk by 25%.
GDP has shrunk by 25%. And also the fiscal deficit is obviously high, being managed. And that is where I think Greece has to look at the public services.
But Rajat, in 4 years or 5 years, they have brought the fiscal deficit from 15% to 1% primary surplus, which is again a very remarkable achievement if you take it as only
right.
as such.
But you see, but that is essentially, unfortunately, a very sort of mechanical accounting approach. And obviously, if you keep sort of shrinking the expenditure, somewhere your surplus or the deficits will go down. But what is happening in the real economy is, as you know, very, very severe, huge unemployment. And the incidence of those cuts is disproportionate. It's the public services which suffer, the health, the education, unemployment, whatever. Now, the third bailout, which has now been sort of agreed, I'm afraid it basically continues that same prescription. If you look at the conditions for this third sort of bailout, is again fairly draconian. You reduce expenditures, you make the pension reforms, you increase the VAT. Now, all of those I think are necessary and indeed desirable, but it's a question of sequencing. You've got a patient on the operating table. You don't lecture the patient on now you've got to reduce weight, you've got to give up smoking, and you've got to sign on the dotted line. You first get the patient on his feet. My feeling is that the Greeks who rejected this whole package in a referendum last month, but then again have come back to the table because they don't have a choice, have to come to grips with this very severe crisis of austerity, which will actually make things worse. What they need now is some sort of an economic revival.
This is where the banker issue really comes in. Do you think instead of an economist's approach, and all the leading economists of the world seem to have said this is not sustainable, the IMF chief economist has said this is not sustainable, that unless you have really a reduction of the debt burden on Greece, you cannot revive the Greek economy and they will not be able to pay back for 50 years. Now this is an IMF who is not particularly kind to any of these things in the past. Given all this, do you think that what I call the banker's approach, or what is the monetarist approach, or what Paul Krugman calls as the Austerian approach, is really the core of the problem today?
The evidence is clear. It hasn't worked. I mean, I don't know which school I belong to, but I just think I belong to the realist school. You try a prescription, which is what they did in 2010, and as I said, high science 2020. But at that time, I was looking at some figures, IMF had projected that the economy will obviously, deteriorate a bit, but then it'll move up again. So the curve was a dish. What has actually happened is actually a straight line decline. It's only in the last year that it's ticked up a bit. So, and it's just a bit. And again, hope springs eternal. So now people are talking about in 2015 it'll grow by slightly under 1%, in 2016 around 2%. I don't really, quite frankly, see how that will happen unless you really start to not force austerity, but you force growth. But Probit, there's another thing here, which is the large amount of this debt, sovereign debt that Greece has, roughly about 340 billion euros, 80% of that is held by other EU countries, principally Germany. Unless we, as an international community, start talking about debt relief, this problem won't go away, because out of this entire amount and the third bailout, only about $50 billion is really being put for sort of new investments. And that too, they put that $50 billion as what is being called an asset trust fund, which basically means Greece will have to sell its assets, airports or aircrafts or whatever infrastructure, and create a $50 billion pool to boost investment. But a bulk of the money, as you said, is going to pay debts, previous debts, the principal and interest. So I think somewhere along the line, the international community, particularly Europe, will have to say, look, we can't walk away from the responsibility that we all probably created, some of it, not all of it, the problem. Now, we're going to have to be a part of the solution. This business of thrusting down austerity conditions, remove subsidies, which by itself I think is desirable, but you've got to look at what subsidies, increase taxes, but tax whom? I mean, they have to have incomes.
So this is an interesting point you raise, that who is responsible for having admitted Greece to the club. Argument is Greece fudged its way in, but actually the EU knew full well they were fudging their way in. So they have to also carry that responsibility. And you also talk about the European Union as a whole, or the Eurozone as a whole taking responsibility. This is a problem with the Maastricht Treaty. You have an economic union, but no political union. And therefore the Greeks can go to hell, as far as the German people are concerned, can be a consequence of this approach.
As a matter of fact, I think that's a very good point, and something that I think we all, not just sort of people in Europe, need to concern ourselves with. Because just again stepping back for a moment, after the German reunification in the 90s and the Eastern European countries coming into the EU, one big difference with Greece is the following. They, East Germany obviously, but also the EU, the Eastern European countries, were part of a German supply chain. So if you could get the wages right, if you could make those countries more productive, if you could make them more competitive, they would benefit by becoming part of the German supply chain. Greece is not part of the German supply chain. Greece exports only about 25% of its output. So Greece is in a very different situation. Greece, I think, needs to get its wages more in line with the productivity. Greece, I think, needs to look at its pension reforms. Greece needs to become more competitive. But what worked for Eastern Europe will not work for Greece. And I think this is something that one needs to recognize. One example, as part of the third bailout, the condition has been that you cannot give VAT exemption to the outer islands of Greece. At a macro level, understandable. But one of the reasons for the VAT exemption in the outer islands is to encourage tourism, which is what Greece has. So now what you're doing is you might end up actually affecting the very industry, or maybe the only industry which is actually very viable. So my point is that macroeconomic measures have to be very context specific. And in Greece's case, I'm afraid it hasn't been so far. And therefore, going back to the main point you're making, which I totally agree with, that if EU is a concept, is not just economics, it's a concept, then I think the shared burden concept must also be borne in mind.
Last question. Do you think there is, therefore, a loss of confidence in the Eurozone, and it will affect the euro as a currency? Other countries will be much more hesitant. Countries which are inside, these issues will continue to raise. Do you think actually the Eurozone leadership has done well by the Eurozone doing what it has done to Greece, which has really converted Greece into a virtually protectorate of the European bankers? That's what the way it looks to me, including the 50 billion trust fund which you're talking about, which is really garage sale of Greece assets. That's what it really is at the moment.
Incidentally, there was a demand at one time that that trust fund be housed in Luxembourg and not Athens. But fortunately, at least it's still in Athens and not
symbolically, at least it's in Athens.
Right. You raise a very important question, Prabir. I have to say that I am a great believer in regional cooperation and integration. And Europe, of course, has shown the way. What perhaps has happened is that they moved on this integration process a bit too soon and a bit too fast, because you also have to, when you admit people to the club, you've got to also make sure that they are ready for it, and Greece certainly was not. Had that happened, I think it will be a disaster if then it starts to break up, because the consequences for Greece of a Grexit is also going to be very severe, and we all have seen the consequences of the banking industry. So therefore, my feeling is that the Eurozone will survive, but I think the Euro leaders sooner rather than later have to recognize that these countries are not all equal and not all capable. But having taken them into the family, they will have to share the burden.
It's been a pleasure talking to you. We'll come back to you with more of these issues as it develops. Thank you very much.